Everybody just calm down. Calm down. What the heck did the stock market just do? We're going to talk about that in today's stock market brief. It is the quarter end, the month end, almost the week end, everybody. My name is Michael Silva. If you're new here, welcome to the channel. We use technical analysis, intermarket analysis to get a good idea as to where the stock market might be headed next. If you haven't done so already, smash that like and subscribe to the channel. Let's go ahead and get into today's episode. Welcome back. What a scary, scary looking day. Red across the board. What's going on here? Let me just tell you this. What just took place is not crazy. I'm going to walk you through my thought process. If you didn't watch yesterday's video, right, it wasn't exactly a market brief, but it was like a how-to tutorial to pick out these key levels. You're going to notice that this is not crazy behavior in the markets. And we're going to talk about that here. But yeah, 11 sectors. This is what we want to pay attention to, right? The 11 sectors that make up the S&P 500. What were the top sectors? Well, we have utilities, consumer staples, healthcare, real estate. All those are defensive names. So as we go into the quarter end, what happened? We had some defensive posturing. Why? Well, I can't tell you exactly why everyone's doing what they're doing, but there's been a huge move in the markets this past couple of weeks, so it's bound to see the market pull back, and now we're going to test whether or not that strength that we've been seeing in the market is going to continue to hold. Now, if we look at the bottom of the list, we got technology down there, more of the midway, but this is what you need to pay attention to. If tech is weak, if financials is down here, and consumer discretionary, that makes up a huge part of the S&P 500. Those three horsemen, when they're down 1.48%, 1.92%, 2.29%, the S&P 500 and the other markets are going to struggle. Now the quarter just ended, the month just ended, the monthly chart. Understand we have a bearish crossover on the PPO. We talked about that and we're seeing in the markets, obviously a lot of volatility, but the monthly candle doesn't look all too bad. I mean, we finished up for the month, right? So up 3.58%. Now it was down a lot. In the previous month, it was down a lot and it was up a lot as well. So we are seeing consolidation in the markets as it stands right now. Now we did get back above that monthly 5 EMA. So guess what? Bulls still have it at this particular point in time on this monthly time frame. The quarterly time frame, you can really see it clear here that we were in a massive, massive range. You can see from above 4,800 to down to around 4,100 this quarter. We were down here and we were asking, hey, are we going to close down here? Because the last time we closed down here, either the Fed steps in or if we have two quarter closes underneath that 5 EMA, well, we had the dot-com bust and the financial crisis. But typically when we get a quarterly close under that 5 EMA, boom, 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 the Fed steps in and the Fed has done something. We didn't get it, right? So we were saved. Not the greatest looking quarterly candle at all, but yeah, well, we'll see what continues on here. Meanwhile, the 35 spread inverted, and it closed inverted for the quarter, at least according to CNBC. When I pulled this chart up myself, it didn't show that it was inverted, so I don't know if it was updated or not. But yes, the 30 and 5 spread inverted. Does that mean we're going to see an automatic crash in the markets? Nope. That's not what it means. You can see here, other curves are inverting as well, and the longer they stay down there, you know, the worse it gets. It's basically telling us that there very well can be a recession come the future or very soon future. Now, keep in mind the shorter end of the curve are actually technically moving up. So there is just, some interesting behavior taking place in the markets. We're going to see how the Fed deals with this. We're not going to talk about that specifically in this video. Let's hop into the cues. So why isn't this crazy what we saw in the markets? Well, to be honest, look at it came from right here, 315 up to 370. See that risk range? That's what I made the video on. Watch that video if you haven't watched it so you can do the same thing. Tagged it perfectly, and now we're starting to see it come off where we're still slightly up for the week. So to see this weakness is not that bad, right? So we had this bearish looking candle the prior day as we ran into that area of resistance. It was defended And now we started to close a little bit lower, getting a pretty more aggressive sell-off towards the end of the day. And you can't see that really on the daily, but you can see it on the 15-minute chart. You can see here on the 31st, we went up and everyone was happy. We went down and then we just chopped around, making it very difficult for traders, and then crushed down below that 5-day moving average, closing well below it. The more we close below that, the worse, and that opens the door to head lower. As it stands right now, though, I mean, we got already extended to the downside via the RSI. PMO is below 0, so I'd feel more comfortable going long if this starts turning back up. But as it stands right now, be careful of the volatility in the marketplace. Now, let's take a look at the SPY. The SPY, you know, from a start of a huge week and everyone's getting super excited to bullish, now the bulls are very, very quiet. Now the bears are starting to speak up. You know, this is that back and forth sentiment that you don't want to get your head too wrapped around in, okay? Understand the key levels, be a wolf, right? Be a bear, be a bull, and then play it very tactically because the volatility's here, so you need to be tactical. This is not easy. When the VIX is below 20 and it stays down there below 20, not for a day, but for, you know, it trends down there for 2 months, 1 month, 3 months. That is when you can feel a lot more comfortable going long and just being bullish all the time, right? And when it's above 20, you got to be very tactical. And when it's above 30, hey, be careful. But yeah, relatively unchanged on the week. It's down 1.54% on the day. Okay, tag the risk range, headed right back down. Does that happen every time? No, so don't think that it does. Okay, sometimes it goes above it. Sometimes it actually just stays around that risk zone or stays below the lower risk zone or expected move, and it's just in its comfort spot, right? But those walls are typically defended. Let's get into the SPY on the 15-minute time frame. Crack down below that 5-day moving average. RSI is getting a little bit frothy here. So if we get a gap down tomorrow and then a move up, that would actually be a little bit more bullish. But if we get a gap up and then it starts reversing, that would be actually a little bit more bearish. So we'll see here what takes place, but rather unchanged on the week, which means what? It means that we can still move to the lower or the upper risk range tomorrow. All right, now tomorrow is Friday. Sometimes we get those VIX crash Fridays, so we may well see a possible update, but you know, be mindful. It's very hard to point out specific trades right now because the volatility already expanded, and now we got to wait for that to contract. On the weekly time frame, the week's not over, but I just want to point out the candle doesn't look too good. So if the bulls want to save this, I mean, they would just have to, you know, start moving up. Easy as that. Like, it'd be nice to get back above this level here, but that's a, you know, shooting star type candle. If it closes just like this, okay, if it closes just like this tomorrow, you know, we would have to get below the low of that weekly candle, which is 450 basically on the dot. It's 450.06. And if we start getting below that, it could spell out, you know, further downside. If we get a weekly close below 450 and it looks like this, but next week we get a close below it, that could potentially spell out more downside there too as well. That would be that confirming weekly candle. Okay, IWM, tag that upper risk range, started to sell off there too as well, back down to 205 in a quick period of time, filled that gap on that gap up, okay? So this gap, we talked about this actually on prior videos. We said, hey, it could be a runaway gap or a breakaway gap. Guess what? It was a common gap, or if we get more weakness, an exhaustion gap. And that's a very big possibility, which means that it shows the end of a big run and we could go back to reversing all that strong market behavior that we've been watching on the 15-minute time frame. Very same situation, started selling off towards the end, back below that 5-day moving average. RSI is getting overextended. Be mindful of this, okay? Don't just hop into trades right away. Remember, we've been talking about the risk profile here. Volume shelf profile, my apologies, and this can act, the POC, the point of control, can act like a magnet, and we're starting to see that here. So if we pull back into here, don't be surprised. Okay, all right, let's hop into some crypto charts. Now, I am sponsored by FTX, so we're gonna get into a quick vid there. People ask me though all the time before I run the ad, you know, what do I use to trade crypto? FTX. I use crypto app or ftx.us. You can use the link in the description below, but use code TraderMike to get a free coin worth $10 worth. It is one of the largest cryptocurrency exchanges in the world in terms of trading volume and daily users. The FTX app is the most complete crypto app that allows users to buy crypto and NFTs with no fees, use a crypto debit card, and track their entire crypto portfolio. It's trusted by over 6 million people to buy, sell, and track their favorite cryptocurrencies. It is an easy platform to use. You can buy things such as Bitcoin, Ethereum, Solana, Dogecoin with zero fees in a matter of minutes. The founder and CEO of FTX is Sam Bankman-Fried, who is a highly respectable figure in the cryptocurrency space. To download that app, you can use the link in the description below and use code TraderMike to get a free coin when you trade $10 worth. All right, everybody, welcome back. We're going to look at the Sailor to Shift ratio. A little bit of a side turn there, a little bit of weakness in the price of Bitcoin, still on a buy signal at this particular point in time, and I kind of felt like this was going to come. Why did I feel like this was going to come? Well, we were running into that 200-day moving average, and we haven't had a proper back test after this run. So now, like I said, we need to see strength test, right? We need to see prior support hold and then confirm it. Okay, so right now, as it stands right now, we're getting that pullback. Now we need to see some strength come back in, then take out this high, and that would be some confirming strength for sure. Ethereum, same situation, not much is different going here. All right, everybody, that's all I got for you on today's video. It was quick, it was to the point, and I will be back here tomorrow with a weekly recap.